I'm here with your 2024 Q2 portfolio update following our recent portfolio rebalance. On the equity side of things, this rebalance focused on increases. That is, increases in market cap, increases in quality, and increasing our exposure to tech. While the S&P 500 as a whole is up over 15% year to date, we once again have a select few stocks to thank for this. What was being deemed the Magnificent 7 last year looks a lot more like the Magnificent 5 this year, as Tesla and Apple's performance has lagged compared to the other 5 names. Not only are these positions carrying the weight so far this year, but more specifically, the technology sector is doing the heavy lifting. Now let's talk about interest rates. It's still likely that we'll see at least one rate cut by the end of the year. And emerging markets tend to benefit from rate cuts, so we've increased our position from underweight to a benchmark weight in this area. On the fixed income side of things, we're continuing to focus on higher quality and longer duration. We're slightly longer on duration than the benchmark. The economy as a whole remains resilient, thanks in part to strong corporate earnings that seem to be providing somewhat of a cushion against potential economic turbulence. We've seen a meaningful pullback in commodity pricing, including a notable decrease in oil prices, which should positively influence future inflation readings. Lower commodity prices mean lower costs for businesses and consumers, which can reduce the overall inflation rate. And this, along with potential adjustments in rental index calculations, could lead to more favorable inflation data in the coming months. Why is that important? Favorable inflation data is crucial because it can encourage the Fed to cut rates, which would lower borrowing costs for both consumers and businesses. Lower interest rates can stimulate economic growth by making it cheaper to borrow for investments in large purchases such as homes and cars. This can lead to increased spending, higher production, and more job creation, all of which are positive for the overall economy. That's your 2024 Q2 portfolio update. As always, if you have any questions or you'd like to discuss your portfolio or any of these changes in more detail, please feel free to reach out to us. Thank you for your trust and confidence in us.